GM. So the weekly close is in. We had a full bodied candle which came right up to last week's candle, which we've swept overnight. Bitcoin is having a lot easier of a time going to the upside than it is the downside. And at the moment, that's simply due to a lack of supply rather than any demand coming in yet. We don't quite have that catalyst or narrative around Bitcoin, which we've had previously. If you think back, narrative over here was bid Bitcoin until the ETF launch. Narrative over here was bid Bitcoin because the ETFs are also bidding. Narrative over here was Trump, he's coming in, pro crypto president. Strategic Bitcoin reserve is going to be launching in the US. And the narrative here was around all of those meta planet companies copying Saylor's model. Right now, you don't have any narrative. If you think for a second, what is the narrative around Bitcoin? There isn't one, because Saylor buying, that's a tired narrative. ETFs, we know they've had some outflows in the past few months, but they're still net positive. However, they're not driving the market right now. Don't get me wrong, they're the reason Bitcoin is at 73.7K, because when they launched, we were back around in the 40s, so they have been a net benefit over time, but it's not going to be an up-only ride. No market is. It doesn't matter because people take profits as Bitcoin has a lot of short-term flows. Not everyone buying Bitcoin is buying and holding forever. That's a small number of people and institutions, of course. A lot of flows that come into Bitcoin are short-term. They're looking to capture the massive trends that Bitcoin has. And then they also take profits and sell when those trends are not appearing. So when those trends do appear again, that's going to be when the demand comes back in. Right now, we're rising because there's just a lack of sellers. We went down to 60K. That's absolutely everyone in this downtrend who held along with any sort of leverage wrecked. Everyone capitulated at that wick to 60K. And you've seen it's not been behaving like a risk asset recently, not dropping on any of the bad news. There's simply just not enough sell pressure to put it down. Now, if we can actually break this high, that's when you can start catalyzing a bit more demand and a bit of a short squeeze towards 80K. Because Bitcoin, as you guys know, been talking about it in every video, we're trading inside this weekly candle and the main targets are 80K. Price, if we can get above last week's high and hold there, that would be where you expect either rejection or potential continuation if you break and hold above it. And it's the same with 60K. That's where you expect rejection or potential hold and break below it. Until then, you're in a range. So you have to treat Bitcoin as it is, which is in a range between 60 and 80K. And on the weekly, we're pushing up, but into resistance, the weekly bands. And it's only once you've built that base, built that cause and effect, and then you see the breakout from it, that demand can start to come in. And then there's always a narrative that ends up following price. As a lot of people say, news follows price. Bitcoin breaks out and then all the ETF narratives start building. And it happens over and over again. And it's after the base got built. Whereas right now, if we rally into 80K, we'd be simply retesting the weekly bearish bands. They're not even getting tested yet, let alone flipping bullish. So that's a quick reminder of the market we're in right now. If you're expecting big momentum trends, it's not what you're going to get. You're going to have to wait as a swing trader. Now, are there going to be some low time frame trends? Well, yeah, it's definitely setting up and it's looked better than it has in recent periods for the prospects of a rally towards 80K, but that's a low time frame trend. That's not going to be a big move like we've been seeing recently from 100 all the way down to 60 in a matter of weeks. So what we're seeing here on Bitcoin is 1, 2, 3, 4, 5, 6, 7, 8 if it closes today, green daily candles in a row. So you're at a point where we swept last week's high on the Monday. So you're at a point where you need to break and hold above it soon if we're going to be rising today or tomorrow. Otherwise, what you're then expecting is if this acts as resistance and while we're below it, yes, Bitcoin can look strong. Yes, dips are getting bought. This is resistance until you get above it. And that sounds so simple, but this is not the place to get long into resistance. What you instead should be waiting for, and what I'd be waiting for, is for Bitcoin to clearly mark up above the resistance, and then any pullbacks, I'll be looking to trade it from 74 towards 80k. I think that will then be the target. It will probably go there pretty quickly because you built, a very big base which you can then squeeze off of. Because any shorts, anyone who's sold in this base, they have to unwind their shorts or even think about FOMO buying back in. And that's why that can lead to a quick rally up, which then you'd expect 80k to reject at least first time, whether it builds a higher low or just goes lower. Who knows? That's too far away. We don't care about that at the moment. This is daily levels. If you want to watch a high time frame update, just check out my playlist. Weekly outlook and monthly outlook is available. But the move, if there's going to be a good move this week or next week, is going to be from 74 to 80. But first, you have to break above resistance. You don't long now. As you can see, we're clearly rejecting because there's also a risk of having a pullback. Just coming back into 72k. Or maybe just a retest of the weekly open. Or maybe it's a deeper dip. And it has to shake people out before it's then going to go for that move. Overall, you're clearly seeing dips are getting bought with all these higher lows. So that's been the playbook. Until that changes, you expect that to continue. So Bitcoin not behaving like a risk asset, having a lot of strength recently. I think all the signs are pointing towards a breakout, and I would expect Bitcoin to have a move to 80k. But again, that doesn't mean you long into resistance. You just throw all your systems out the window here. No. Still got to wait for that show of strength, that confirmation. And if so, then you're looking at something like the 1 hour bands, maybe even the 15-minute bands where you have to drop to a lower time frame. And you have to follow those 12 and 21 EMAs, which I like to use. So that's what I'll be looking at. We're building a nice base here on the 1 hour below resistance. Let's see. If we can get a clean breakout and there's going to be momentum, then look for dips in those H1 bands. Maybe it comes up something like this, as it would be quite aggressive. And you see those bands start traveling up, and acting as your support throughout the trend up. And if it's going to be an even faster trend, maybe that then occurs actually on the 15-minute. And it doesn't look like this entirely, and you're going to see a bit more of a violent move, probably an initial impulse up towards 76k, and then just a very fast grind up. And maybe it's going to be the 15-minute bands if you're going to get that scenario. So that's what I'll be looking at, because I think it will be a quick move if we do get that 1 hour close above there with that proper breakout confirmation. Otherwise, if we reject it today, then we've been up only from the weekly open. We've not put in much of a lower wick. We put in a decent one, but there's room to put in a proper low for the week since it is only Monday. So, if we come back to the weekly open, I'll be watching to see, first of all, does it hold at those 4 hour bands, which have been holding recently? Or does it actually just go below, put in a proper dip, and then if you start to see the weekly open reclaim, that's another way to get long on a trade, because then it gives you your clear area of where you're wrong. So yes, you'd be longing below resistance, but instead of having the entry confirmation, you now have the invalidation confirmation where you can get on board here, reclaiming the weekly open with your stop loss clearly at the low, because that should be the trap set for the week, and you shouldn't break below there, because if you break below there, you're probably actually going to go into a downtrend, because that would then be making a lower low for the week. Very easy ways to just form your bias by having patience for some sort of entry confirmation, show of strength, or invalidation confirmation where you're wrong. And either two ways can help you with the basis of forming your trade. Of course, you've got to take the trade with your system though and have rules for it. So that would be my bias for Bitcoin. Above 75, you're looking for moves towards 80k. Until we break above it or have a dip and a fake out below the weekly open, no moves need to be made. Not trying to long into resistance here. That is one quick way to get wrecked. But looks good so far. I mean, you're creeping above the daily 50 EMA. The risk is, of course, you get something like this. So daily bands have turned green. That's great. But is it going to be another fake out? Is it just going to be a rally towards 80k and then come back down? This is all very possible. And it's why you can't just go full turbo bull again. This is still a low time frame traders market. because on the weekly, there's no signs that we're going into full bull again yet, but it is a good sign that we are rising and having an easier time going upwards. But as I said, just because there's a lack of sellers and supply here doesn't mean there's actually demand coming here and a catalyst and narratives. It just means Bitcoin will rise to a price where sellers are actually happy to sell again, and that probably is 80k. It's an area where they'd say, yeah, that's worth selling, let me get out. And that's what then can trigger your dip, where you then look to see, is it going to be a higher low or a retest of the lows? Who knows what's going to happen? We'll come to that if it does happen, but got to be wary of, traps above the 50 EMA on those first times the bands flip green. You see it so often. Even this, perfect example. We come up to the highs, bands go green, but look how inefficient it is. It's just getting everyone fully bullish again because you're going up so quickly. Everyone gets bullish, thinking we're going to just go to the moon. Tops out, and off you go, back down. And it just ends up being an inefficient squeeze up. It's not demand and new catalysts coming in to push price higher. It's just price going up to a place where sellers are happy to sell, and that's at the all-time high. And then boom, they sell it down, and off you go back lower. Bands go red, and you get back below the 50. So if we are going to go into something like this, I think this is probably what everyone wants, and who knows, maybe that's where we are. Daily bands are flipping green, and you're just going to go into this rally. Then, again, you can just trade it as it comes. But you've got your bands below the 50, whereas in this example, your bands were crossing above the 50. You also had, a lengthier base built here, and it was within a bull market. So it's very different if you're going to compare it to something like this, where you've built a base for 52 days, whereas here we've probably built a similar base, I'd imagine, 39, 38. So, we're not even built the equivalent base as we did from the tariff sell-off, which was within a bull market. And this is within a bear market. So, it's just a good reminder to balance everyone out in this video. All you guys watching, I'm not going to clickbait you with nonsense. I'm going to give you guys reality. After a 52% dump, you're going to need more time to reaccumulate. So don't start thinking it's going to go to all-time highs in one move. Trade the move short term. It's not a swing traders, position traders market right now. That was back here when you had your little, I say little, but 30% dips, not your 52% dips. This needs recovery, at least the equivalent, if not more. So I'd expect any rally, when it gets to a level where sellers are happy to show up, probably 80k, that's when you then actually see sell-offs. Probably good places to look for shorts or TP any longs that you have in between there, as you're likely to pull back and continue basing out. That would be the most likely scenario. And that's, of course, assuming we're not also going to go lower, because on the weekly, it does suggest that Bitcoin is more likely to go down than up. That's just simple from looking at the fact that the bands are red until you get above the weekly market structure, which is 93.4k. It's bearish right now. So work to do until you can say it's more likely to go up than down, because it's been going down and the trend is your friend. So low time frame's great. Starting to build and starting to look decent and offer low time frame long setups. And longs are definitely the play on the low time frame. But that needs to build into the high time frames, which is going to take time. It's just the reality. Don't let anyone kid you into thinking you're just going to the moon. Twitter, YouTube will have you believe that because that's what the algorithm favors, but it's not the case for BTC. Eventually it will go to the moon, and it's going to allow you to reaccumulate if you can be patient and not FOMO into all the bounces. And you can be the guy who waits for, okay, 80k, good place to sell. Yeah, let me buy back in on the next dip. If you can be that guy who waits for the actual dips in the low end of the consolidations, you're going to do much better than the guy who FOMOs in to every single little micro move. So that's Bitcoin. Let's take a look at hype actually. So mentioned this on the weekly outlook last night. 2 trading paths that I'd be looking at for hype. So green path would be a nice strong daily breaker structure. Ideally, I'd like to see it mark up to 40, 42, 43 even. And then that would be the signal to me to look for pullbacks into the daily bands, which will probably be sloping upwards like this. Look for something like that where I can get myself long with a clear invalidation. Wouldn't want to see closes below the 2024 all-time high. And I'll be playing that towards 50. If we don't get a solid breaker structure, then orange path I laid out will be looking for longs at the 50-day EMA on pullbacks. Let's see. Obviously, a lot of attention on Hyperliquid, the exchange, because they got oil, they got NASDAQ trading over the weekend for the first time ever on chain using crypto. So having a lot of attention on them, which leads to the token hype having a bit of appreciation here because it's got a lot of eyes on it. So it's bucking the trend of most altcoins and it's building high, low structure. So if you can confirm that high, I'm just looking to get in one of these high-low scenarios over here. And that starts with, a breaker structure. That's the ideal path, green path, where today I'll be watching the close, see if we can confirm that and close above February's high. Then it becomes dips when you want to look to get long. So like to see a nice show of strength on hype, ideally up to 40 today on the daily close. And I'll be looking then for longs on the daily bands, which I'll update you guys, of course, in the school on anything I take. That's really pretty much it for altcoins. Also, check out the weekly outlook if you missed that one. Got a bunch of high time frame outlooks there and trade ideas in that one. When we look at the wider markets, we've got VIX actually starting to melt down a little bit now. So you're seeing actually a little bit of risk on sentiment return in the markets and stocks having a big squeeze up today. Every time stocks come into the lows, they squeeze up. It's been a common pattern. It's much clearer on the NASDAQ where you see every time they go into the lows, squeeze up, go into the lows, squeeze up, go into the lows, squeeze up. Shorts are not getting rewarded for holding. And now you've got Qs above 600. This creates squeeze risk because there's a bunch of options now expiring this Friday for the month of March. And that's the same on Yubit for Bitcoin, by the way, which I'll be going through this week. So stay tuned for that. But above 600 can lead to further squeezes on the NASDAQ. But remember, it's the 50-day EMA, which you need to actually close and hold above to flip risk on again. And if that is going to happen, you're going to see risk on across Bitcoin, crypto, stocks all together. If you start closing above the 50-day EMA, probably going to be coincided with war de-escalations. That's going to lead to, your proper bull market rallies coming back on if we're going to get one. But if that rejects, then it's more of the same. It's still bearish / neutral, and bears really need the lows to break for any proper markdown when it comes to the stock market. But there's been some great trades when it comes to NASDAQ if you guys have been following me, and same on S&P. We've been shorting these moves at the 50. It's offered that great entry point at the moment, and it's been working, but how long is it going to work for is the question. Are squeezes going to continue rejecting? When are we actually going to get the breakdown, if it is going to happen, or are we going to go back risk on in all markets? That's really the big question here. And you've got VIX obviously coming down recently. If we go to the 4-hour chart, you can see that Bitcoin squeezing up towards the highs. It's been strong. Oil started to have a sell-off today, so that would be a bit more risk on if that's starting to come down. You've got, obviously, VIX coming down, which is good. S&P having a squeeze up. So is there going to be de-escalations in the war? I don't know. You've also got talks of US having 2,500 troops deployed to the Middle East. Is there going to be a ground invasion? I'd say that's the next big escalation because markets are just fading all of these war escalations. They just don't care, no matter how crazy it gets, it seems. Yes, they're dragging lower on equities. Bitcoin, by the way, just dragging higher, doesn't really care at all. But they're not leading to breakdowns that you would expect with oil at 110 or 120. It's not leading to the big dumps. VIX even above 30, not leading to the big downside. I think everyone's hedged and prepared for it. So I think the next escalation that markets are going to actually react to as risk off would be a ground invasion. Otherwise, markets will give you your fairest gauge on what the world thinks about this war, if it's risk on and risk off, by the prices. And if it's escalating or if it's not escalating. Markets will always be your best gauge of that. They'll always show you. So seeing sell-offs on oil and a bit of risk on today. Let's see if that can continue into the week. But squeezing on equities, they're still weak. Still crypto is where it's at. Got Bitcoin squeezing up. If we look at the wider altcoin market, what we're seeing is it finally coming towards its consolidation highs? Yeah, it's also coming towards its consolidation highs. So, this is what I've been saying, how altcoins are so oversold that they need no reason to rally at this point. And it would be almost comical to see equities falling and altcoins rising, isn't it? The markets often are humorous, is I think the saying. But if you see, altcoins start to break above their high, then you can now start to see some altcoin rallies. And that's going to be coinciding with Bitcoin going towards 80K, of course. But that's where we've been taking some trades. We've got some setups laid out. Of course, VVV's been one that I'm in. Going to be managing this as per the weekly outlook trade of the week to see how this plays out, whether I should add to it and whatnot or take profits. But you're looking for altcoins that are outperforming with higher high and higher low structure because they're going to be the winners. You're essentially looking for altcoins that are looking stronger than the index if there is going to be a risk on rally, which is a big if, by the way. So keep that in mind. But, if these can break above their consolidation highs on the index and you've got an altcoin which at the same time has already been breaking out and is then on its second leg, that's going to be your outperformer that you want to look for. The one that's already broken out of its consolidation high, while the index is then only breaking out after it's already had its first mark up. That's the relative strength that you want to be looking for when it comes to trading any of these alts, any of these cryptos. So guys, if you want an exchange where you can get lifetime VIP fees, check out the link below in the video. Get a nice free deposit bonus here for a few days more only. So make sure you check that one out. Lock in those lifetime VIP fees with a link. You can trade TradFi, metals, Forex, stocks. You can trade crypto, altcoins, all in one place using USDT. Super, super nice to have it all compact in one place. When we're looking at the wider market, one thing we're seeing with these altcoins is ETH volume still above Bitcoin volume per 24 hours. Something I've been flagging for a little bit, and I've been saying very famously that once this finally reverses and you see Bitcoin 24-hour volume above Ethereum again, it's probably when the bear market's over, because it's just strange, and I just don't understand why the 24-hour volume on ETH is higher than Bitcoin for literally months and months on end, when ETH is just trading in absolute nothingness with no volatility. It's very, very strange, to say the least, especially when it's got, half the open interest. Why is it trading more volume? It's literally 20% of the market cap. Doesn't add up at all. Once Bitcoin gets back on top, we can have nice things again when it comes to crypto. That's going to be a signal I'm watching out for sure. So keep an eye on that. We look at the data on Bitcoin, get a bit of a closer view. What have we been seeing? So go to 4 hour here. When we came into 74K the last time, you had quite a big ramp up in open interest. A lot of leverage came in, got excited, that got unwinded pretty quickly. This time, you've not really had much leverage come in, actually, coming up to these highs. So it's been a sustainable move. Obviously, perp, market order, CVD side has been pretty aggressive, whereas spot's been not so aggressive. But you also got to understand that just shows one side of the order book. You also have your passive orders, and if every time we're dipping down, you've got a spot bid coming in every single time, then that's going to stop the market from going down on that passive side, which doesn't show up here. And that's what I'm watching here. You're not seeing a big tick up in leverage. No one's over leveraged at the highs here, so it's shaping up certainly, whether it's going to be immediately or if it's going to be after a dip for a move towards 80K. Upside looks much easier than downside, as you can see by all these higher lows, and you're not seeing over leverage as we saw previously. As we're coming up into the highs, you're actually seeing less leverage. So definitely a sustainable move, and dips are getting bought and bidded by that passive side on spot, and leverage is not coming anywhere near exhaustive levels. Bitcoin's breaking out pretty easily, as it seems, on all these pushes without the need for much leverage. So healthy market at the moment. That's what we're seeing on BTC. So guys, if you enjoyed this video, make sure you smash a sub, smash a like, smash a comment. That massively helps me in the channel. Help me get to 2K. That would be absolutely G. If you want to join the school, drop me a message on Telegram, and remember, get yourself VIP fees. Lock it in for a lifetime. Just sign up and get some free money deposit bonus here on Yubit, where you can trade crypto, stocks, metals, Forex, all in one place. There's nowhere else like it, with no KYC and no VPN restrictions. So that's the update. I'll see you guys in the next one. GM.